Hi friends, welcome to a brand new segment of Invest Talks, Friday Basics, which will give you good insight about Indian equity market. My sincere effort in this segment is to create awareness to all in simple language. This series will be arranged in such a way so as to understand everyone who are beginners. Please share this video to all those who wish to learn, understand and participate in stock market. Please don't forget to subscribe and click the bell button to get the notifications of upcoming knowledge-packed videos on personal finance and stock market. Welcome back to Finvest Talks, where we make everyone understand the basics of money management. Before going into this video, make sure you watch earlier videos of this series, which is mentioned in the I button. In our previous video, we discussed about opening a new Demat account with Zerodha. What are the documents required and step-by-step procedure for opening a zero brokerage new Demat account with Zerodha. Hope you got a Demat and now ready to start your first investment. In this video, we will be discussing about how to start investing. What are the 8 points one should remember before start investing or before creating a fundamentally strong portfolio as a beginner. Here, we will see how to create a safe portfolio for beginners and we'll study 10 blue chip stocks which have potential to give decent returns for future. Also, I will tell you one bonus stock which is a safe bet and it will give you annual dividend which is more than your FD interest. The stocks discussed here in this video are not a buy recommendation and it is only for study purpose. Please discuss with your financial advisor before investing. Let's begin. As a beginner, before investing, you should remember 8 important points. Point number 1. Start small. Start your investment with small capital. As your knowledge and confidence improve, you can scale up your capital slowly. Point number 2. Diversify your portfolio. There is a famous proverb, don't put all your eggs in a single basket. That means don't put all your investment in one stock because if it fails, you will be left with nothing. You should invest in different stocks allocated with different sectors so that your investments are diversified. As a rule of thumb, don't invest more than 5% in any particular stock and not more than 20% in any particular sector. Point number 3. Invest only in blue chip stocks. Blue chip stocks are always safe haven for new investors. Once confident, you can explore mid-cap as well as small-cap stocks. Point number 4. Never invest in free tips or advice. Don't follow paid tips or advices. It's for making them money, not for you. Point number 5. Avoid blindly following the crowd. You should not follow the mass. Instead, you should follow the smart money, that is FII, DII, etc. We will discuss more about that in our upcoming videos. Point number 6. Invest in what you know or what you understand. It is good to invest in business that you understand well. For example, if you are an automotive engineer, you can confidently invest in good companies in automotive sector where you can understand the business well. Point number 7. Invest regularly and continuously. If your initial capital is less, you can plan to start in SIP, Systematic Investment Plan, which will help in averaging. Point number 8. Have discipline and follow your plan. Having discipline is one of the most important things required in stock market for investing as well as trading. Other requirements being controlling emotions, risk reward, capital allocations, strategy, etc. Now we will see the 10 best investment ideas from Bluest of Blue Chip Universe for beginners. On position number 10 is the company we know from our very early stage. It's the baby food company, Nestle. Nestle is having very famous brands like Maggi Noodles, Nestle Milkmaid, baby food like Lactogen, Cerelac, Nestum, and chocolates like Bar One, Munch, Kit Kat, to coffee like Nescafe. It is one of the most famous FMCG brand with a market cap of 1.6 lakh crores. Here the stock is trading at a PE of 76.9 which is well above the industry average of 53.8, which shows the stock is trading at a higher valuation. It is commanding such premium valuation due to good key parameters such as higher ROE and ROCE, which is well above 100%. The company is having almost no debt with good dividend yield of 1.16%, which is again a very good thing. We will try to understand the importance of each and every single parameter in detail in our upcoming session on fundamental analysis. Here the aim is to do overall analysis on basic parameters so that the beginners can understand. In last 1 year, this stock has given a return of 4.75%, which is very low compared to its own standard. If you consider last 5 years, it has generated an overall return of 178.31%, which comes around an annualized return of 22.71%, which is very good. Which means it doubled your capital in approximately 3 years. In case of max return, which is for a period of 11 years, the absolute return is 600%, which comes around annualized return of 19.36%. If you have started monthly SAP on this stock starting from 2016, the absolute return is in the range of 74.73%, which comes around 12% CAGR, which is also good as it has doubled the return compared to bank FD rates. The company is having a strong promoter holding of 62.76% with good FII holding of more than 12%. Overall, 83% of holding is with strong hands. Half of the analysts has given a buy rating on this stock with an expected target of 21,966 for May 2022 as per ticker tape analysis. On position number 9, it's our largest infrastructure company in India. Larsen & Toubro is India's largest construction and engineering company. The company operates in 3 segments: engineering, construction and services. It is one of the largest and most respected companies in India's private sector with a market cap of 1.97 lakh crores. The stock is trading at a PE of 14.8, which is above the industry average of 11.1. It is having an ROE of 18.5% and ROCE of 15.3%, which is a very good parameter. The company is having debt to equity of more than 1.77, which is on the higher side, but can manage due to higher interest coverage ratio, which tells the capability of managing the debt. There is no pledge shares in the company, which is a very good factor. In last 1 year, the stock has given a return of 59%, which is very high compared to its past performance. If you consider last 5 years, it has generated an overall return of 61.93%, which comes around an annualized return of approximately 10%, which is not attractive. In case of max return, which is for a period of 21 years, the absolute return is approximately 1414%, which comes around CAGR of 13.76%. If you have started monthly SAP on this stock from 2016, the absolute return is in the range of 16.24%, which is not good. The company is having a strong FII and DII holding. 97% of analysts have given a buy rating on this stock with an expected max target of 2025 for next 1 year, which is approximately 46% from current price as per ticker tape analysis. Going forward, for our economy to revive, L&T has to play a major role and is poised for a good growth from current levels. On position number 8 is the Asia's 3rd largest and world's 9th largest paint company, the Asian Paints. It is the largest paint company in India having 42% market share. Asian Paints Limited is an Indian multinational paint company with a market cap of 2.66 lakh crores. The stock is trading at a PE of 84.8, which is below the industry average of 86.8 and is available at good reasonable valuation. It is having ROE of 27.4% and ROCE of 35%, which is a very good parameter. The company is having literally no debt. The company pledged approximately 10% of its equity, which is fairly okay to raise the capital. In last 1 year, this stock has given a return of 78.66%, which is very good. If you consider last 5 years, it has generated an overall return of 191.75%, which comes around a healthy CAGR of 23.9%, which is attractive and had doubled your capital in last 3 years. In case of max return, which is for a period of 21 years, the absolute return is approximately 16,169%, which comes around annualized return of 27.44%. That means every 2.6 years you are doubling your capital. If you have started monthly SAP on this stock from 2016, the absolute return is in the range of 97.92%. The company is having a strong promoter holding of 52.8%. The FII holds more than 20% and more than 80% of the holding is with strong hands. Analyst has given a buy rating on this stock with an expected max target of 3,452 rupees for next 1 year as per ticker tape analysis. Asian Paints has shown good recovery compared to its peers after this pandemic. This is good from an investment perspective considering the highly discretionary nature of this business. On position number 7, Bajaj Finance, a subsidiary of Bajaj Finserv, is an Indian non-banking financial company. The company deals in consumer finance, SME, small and medium-sized enterprises, commercial lending and wealth management. Bajaj Finance Limited, formerly known as Bajaj Auto Finance Limited, is one of the leading NBFC in India with a market cap of 3.21 lakh crores. The stock is trading at a PE of 72.8, which is well above the industry average of 17.2. In financial stocks, it's good to evaluate based on PB, price to book value. The current price to book value of Bajaj Finance is 9.2, which is well above the industry average of 0.78 and is available at very high valuation because of its sheer performance over the years. It is having 3-year average ROE of 17.4% and ROCE of 11.1%, which is good. Here we will not see debt to equity ratio as financial sector runs on borrowed money as a part of their operation. No shares as pledged by this company, which is a very good parameter. In last 1 year, this stock has given a return of 155.4%, which is due to high volatility in market. If you consider last 5 years, it has generated an overall return of 586%, which comes around an annualized return of approximately 47%, which is extraordinary by any standard and can double your capital in every 1.5 years. In case of max return, which is for a period of 21 years, the absolute return is approximately 118,266%, which comes around annualized return of 40%. That means every 1.8 years you are doubling your capital. If you have started monthly SIP on this stock from 2016, the absolute return is in the range of 160.91%, which is a CAGR of 21.15%, which is very good. The company is having a strong promoter holding of 56.12%, with good FII holding of more than 24%. Overall, more than 88% of the holding is with strong hands. Analyst has given a buy rating on this stock with an expected max target of 7,515 for May 2022 as per ticker tape analysis. Bajaj Finance is one of the biggest top 10 wealth creators in last 25 years, so it can continue its long-term journey in future also. On position number 6, ICICI Bank. Industrial Credit and Investment Corporation of India, ICICI Bank Limited is an Indian multinational banking and financial service company. ICICI Bank is the second largest private bank in India in terms of market cap, credit and deposit, with an overall market cap of 4.4 lakh crore rupees. The stock is trading at a price to book value of 3.62, which is well above the industry average of 1.93 and is available at a very high valuation because of its good overall performance over the years. It is having ROE of 15%, which is a very good parameter, and ROCE of 6%, which needs to improve in future. Here we will not see debt to equity ratio as banks operate on borrowed money as a part of their operation. It is having no pledged shares, which is again a good parameter. In last 1 year, the stock has given a return of 111%, which is due to higher market volatility. If you consider last 5 years, it has generated an overall return of 219%, which comes around an annualized return of 26%, which is very good, and can double your capital in less than 3 years. In case of max return, which is for a period of 21 years, the absolute return is in the range of 5,222%, which comes around annualized return of around 20.8%. That means every 3.5 years you are doubling your capital. If you have started monthly SIP on this stock from 2016, the absolute return is in the range of 88.7%. This company is having a strong FII holding of 47.8% with more than 89% of holding in strong hands. Analyst has given a buy rating on this stock with an expected max target of 826 rupees for May 2022 as per ticker tape analysis. ICICI reported a strong quarter led by healthy business performance across all business segments, so it is a potential multi-bagger in long term. Here we discussed 5 stocks from top 10 stocks for creating a safe portfolio for beginners. These stocks are from bluest of blue chip which have potential to give decent returns in future. In our next video, we will continue with the rest of the 5 stocks along with one bonus stock. For those who wish to accumulate wealth through systematic route, I will be sharing a small case from the above mentioned stocks which you can invest through SIP route. Please do like if you like the video and don't forget to subscribe to get the notifications of upcoming videos on personal finance and stock market. Please post your valuable comments. Do follow the Friday Basics to make your stock market journey easy. Thanks for watching and have a good day.